everyone, welcome to today's weekly tax update. I am Shirley Liu, and I'm one of the 800 certified tax planner in the US. I'm also a fully licensed CPA in both Canada and US. My firm Freedom Folio specializes in working with real estate clients. We've saved our clients $2 million in federal taxes and counting. So today I want to talk about 2024 tax changes. By the time this video comes out, I think the tax season already started. It started on January 29th. So IRS is already accepting tax returns. But it's not too late to learn about the new changes and some of the changes that are still in the making. So the first and foremost, I want to talk about the updates in the 2024 tax brackets. So IRS actually adjusts these numbers every year. And the reason they do that is to recognize that, the cost of living is going up every year. So it's getting more expensive, and that's why they try to, keep this up with the inflation every year. So as you can see that, the income threshold compared to 2023 is higher. So if you are a married filing joint, and then you do not have any income over $23,200, then you're not subject to any federal income tax. But if you are making anything over $487,450, but not more than $731,200, then you will be in the 35% bracket. Anything over the $731,000, you will be in the top. You will be taxed at the top, 37%. The next thing that's gonna be relevant to a lot of investors, specifically those of you who are investing in cryptocurrency, bonds, or stocks, you want to pay special attention to this because this is called the capital gain tax. Anytime that you cash out from your investment, be it stock or a real estate investment, or it could be your collectibles, right, your artwork, then you need to pay what they call capital gain tax to the government. So they've also raised the income threshold for the capital gain taxes. So if you're a married filing joint, and if you did not have any more than $94,051 from your investment income, there's no capital gain tax. But as soon as you make, let's say if you made $94,052, right, then you will be subject to the 15% capital gain tax rate. And then if you made more than $583,750, then that you're in the 20% bracket. And then if you're just a single taxpayer, that threshold is actually lower. So anything over $47,000, you gotta pay the 15%. Anything over $518,900, you gotta pay the 20%. And if you're selling art, anything you sold on the artwork, appreciated value, that's subject to 28% tax rate. Or if you are selling the 1202 qualified small business stock, again, this probably doesn't apply to most people unless you are thinking about exiting your business. Definitely give us a call and find out more about what this is, because 1202 qualified small business can give you up to $10 million capital gain exemption, exclusion, if you set up properly. But yeah, if you are selling, you're a business owner, you're thinking about selling some of your small business stock, then you need to pay 28%. Anything like recaptured depreciation, that's like 25%. And don't worry if you don't know what any of that is. You can always give your CPA or your accountant a call so you can learn more about what that is. And then the retirement plan, this is also very important to know, at the beginning of the year, because the last thing you want is finding out at the end of the year when all the payroll are run and then you still didn't even maximize your, 401k plan or your deferral plan, right? So I want to talk about the retirement plan for small business owner first. So this is for S Corp and C Corp, which is one employee. This is the updated, income limit, the contribution room for your employee and also for employer, right? So if you are a one employee S Corp, one employee C Corp, and you have a 401k plan for the employee, on the employee side, they can maximize their 401k up to $23,000, or they can put in $30,500 if you're 50 or older. And on the employer side, you can contribute, everything included. You can put in up to $76,500 on the employer side. For the simple IRA, the limit now has increased to $16,000 for people under 50. For people over 50, it's $19,500. On the employer side, you can match up to 3% of your employees' deferral or up to 2% of their contribution. And then the traditional IRA, you can do $7,000. Roth IRA, it's now $7,000, and then if it's $8,000 if you're 50 or older. If you're just an individual taxpayer, right, you should also know about your contribution room. So for a 401k, again, it's $23,000, and it's $30,500 if you're 50 or older. And then, it's up to 20% 401k. It's up to 20% of your self-employment income, but no more than $60,000 or $70,500. And again, I'm talking about sole proprietorships or partnership. This also applies. Simple IRA, the limit is $16,000 or $19,500 if you're 50 or older. Traditional IRA is $7,000. Roth IRA is $7,000. Now, another thing I want to talk about, and this is a change that's already here, right? So there's really no debate about it. We're not waiting for anything to be signed in law because this is already here. This is what they call the Corporate Transparency Act, and this requires every LLC owner to file what they call a business ownership information report. So the short form is BOI. So I'm going to keep on referring to it as BOI. And then who do you report this to? You report it up to FinCEN. So what's a FinCEN? So for those of you who are not familiar with this, what it is, it's just think anti-money laundering, okay? Because increasingly, a lot of people, we're becoming like more globalized, right? And then we're all becoming like digital nomads. So if you are U.S. tax residents, and then you say if you have a foreign bank account in Portugal because you have a vacation house there, your vacation house does not need to be disclosed to anybody, right? Unless you rent it out. But if you just have a vacation house in a foreign land, that does not have to be reported to FinCEN. What FinCEN does want to find out is if you have a bank account in Portugal, and then how much is the maximum value that you have in that bank account. And that can include like any cash value you have, any stock you have, any bond you have, any mutual fund that you have. So just think anything that's like finance related, financial investment that you have outside of the United States, you have to disclose and report it to FinCEN. And the penalty can be very steep, if you don't disclose this properly and then somehow they find out, then, you could face up to imprisonment up to 5 years. Or I believe like it could be like $15,000 a fine a year. So for the same thing for the BOI, so they're trying to implement this for the exact same reason, right? So who needs to file? I really want to just simplify this. They do have a very exclusive, like a long list of people who need to file, but just to simplify, if you filed an article of incorporation with the state government, meaning if you form your business with your state government, then you need to file. And this includes a lot of our clients who are real estate investors, right? They like to set up a single member LLC and then transfer the property over to that LLC. In most of these cases, we actually help them form that single member LLC. So yeah, they definitely, qualify, and then they fall under this who needs to file category. So they definitely need to file this BOI. But who can help you file? This is actually unclear right now. I do not have I don't really have an answer for you guys on this, unfortunately, because FinCEN is not really under the IRS jurisdiction. It's not even enforced by the IRS. So there's not going to be an IRS agent knocking on your door if you didn't, submit your BOI report. If anything, it's probably going to be the FBI. So because of that, your CPA can represent you in front of the IRS, but they cannot represent you for anything outside of the IRS. So right now, this is pretty ambiguous, and then it's debatable. I think it's really up to the state board to decide if CPA have the power to help file the BOI for their clients. the report itself is actually pretty straightforward, right? Because again, it's just an information report. You're not really paying any taxes on there. But I think what becomes tricky is when it comes to determining who the owner is for the business. That's where the lawyer need to come in, because what if the business had a reorg, right? And then there's just so many different type of reorg that could happen, and then lawyer really have legal responsibility to disclose or figure out like who the ultimate owner is on that LLC. So I know for a lot of CPA firms right now, they actually refer this BOI report back to the attorney or to other attorney who can help file this report without kind of stepping over the law, because what the CPA, I think a lot of CPAs are scared of right now is like, what if we're getting into that unauthorized practice of law, because that stuff that has nothing to do with the IRS. That's completely it's in the legal realm, right? So but that I have to check with my insurance company, and then maybe I can get more guidance from them. So again, this is not clear right now who can help you file. Maybe your CPA can, maybe they cannot. It's really up to the state board to decide. But when do you need to file this? So if you did not have a business registered with the state government before January 1st, 2024, you have until January 1st, 2025 to file this report. But if you do have an LLC that you started this year in 2024 after January 1st, then you have 90 days. You have 90 days to file this report and then get it in. Now I want to talk about something that's also up in the air. It's something that they're discussing right now. It's called the expanded child tax credit. I think it already passed the House, but then this has not been signed into law yet. But the commissioner has already come out and said, don't wait on this to file your tax return. So what this is like they basically want to give more money back to the working parents with, dependents. Right, so if you don't have kids, don't even worry about this, right? But if you have children, then this new tax credit is gonna give you more money back. So I think right now you can get up to $2,000 per child tax credit. So the new tax law will expand it from $2,000 to $3,000. But absolutely no need to hold off on you filing your return, because the IRS commissioner already said, if this does get signed into law, then they will make a computational change on your return, so you do not have to file amended return. If you did not wait until they finalize this into a bill to file your return, they will just adjust it and then give you the money back. And I'm not sure if they're going to give it money back in the form of deposit, or it could be in the form of a check with the interest. That I'm not sure, but at least the good news is you don't have to file amended tax return. And then you're going to, for those of you with kids, you're actually going to get more money in your pocket. So I hope you guys find these tips very helpful. Again, we try to share these updates on a regular basis. And then, I do have articles that are posts going out almost every single day. So this webinar is just something that I do in a video format on a weekly basis. But definitely, scan this QR code so then you can subscribe to our social media channels and stay updated with all the changes that's going on in the tax world, so that you can properly plan your year ahead. Again, thank you so much for your time, and I hope you enjoy this little updates.